Okay, so you can see the screen okay there, folks?
Yes.
Good
Yes.
stuff. So I'll tell you, I'll just start off with a brief recap here. Just of the market. You can see the kind of the volatility the last few days. That's Friday. That's Donald Trump sending out a tweet um, about China, and the market sold off 2.87%. That's Monday's trading, and that's pretty much a tweet was sent out on the Sunday, more or less saying, "Oh, I was only messing." Um, the market went back up, but then the market was volatile the next day because China more or less said there's no point in meeting, and basically when there's threats being leveled against it. And then yesterday we had a kind of a continuation. There was a bit of a rally yesterday, but it was kind of indecisive. So today futures are showing up 0.4%. On this day here, we were actually considering initiating a new put option strategy on SPY, and to be honest, the market kind of just rallied back, and I was unable to get it on quick enough. So probably in hindsight, I was watching it very closely at the open, and actually this 620 put, which I believe down here, it's the price will show up in a second, but this had actually gone up to nearly $600 a contract at one stage. And really, in hindsight, should have pulled the trigger earlier. But I was, I suppose, just waiting to see was the low going to get taken out. So this is really what I was waiting on this day. I was waiting to see that this low here get taken out, and if that did, and we broke down below this 50-day moving average, it would have been prudent to hold off a little bit longer. Anyway, hindsight 2020, we didn't get the trade on. So on SPY, just my own view is I'm just kind of waiting off there. That's still not a bad premium, by the way. It's a 0.5%, right, for 29 days. I think about, like, if you extrapolate that over the course of a year, which is 6%, you wouldn't be too disappointed with putting on some sort of a trade that's going to give you 6% in a year with a 93% probability of profit. So that short put trade, whilst the premium isn't as good as it was, it's still not bad. So really what I'm waiting for is maybe another 1 or 2 down days to see that premium creep back up again, and that's the trade I'm going to target right there. So that's SPY. Is there any questions on that, folks, on SPY, or how we're going to deal with it? Okay. So the next one up then, I suppose, our crude oil trade. Any questions on that at all? And if you haven't got the trade on, let me know if you're thinking about putting it on, and I can kind of go through what strikes you should be picking now. So that will be important. So here's the chart in crude oil. So you can see there, it's been kind of creating lower lows here, but there's been news out overnight on crude oil, or since yesterday. President Trump is putting pressure on India not to buy oil from Russia, which gave oil prices a bit of a boost. Obviously, if the supply coming from Russia is out of the market, that pushes up the price because the demand is still there and supply remains the same. But there's two counter weights on oil, I suppose. One is that there's still an excess production of oil versus demand at the moment. And then secondly, you've got, I suppose, the potential for even a ceasefire between Russia and the Ukraine, which could actually change the goalposts again. So you got to weigh all of this up all the time and see what's right. But notwithstanding all of that, next support is $55. So again, just a reminder of that trade. We sold the crude oil futures contracts options. So we didn't go and buy a futures contract. We sold a put option on the futures contract, which basically meant that we said we're not prepared to go long just yet, but if it did fall to 55, we would go long then. And in return for that, we got paid this insurance policy. So that trade is still on. We're up $63 on it. We were up nearly, what, 350 at one stage. I have an order in to close this down when the value of this gets to $90. So just remember, and it's important you remember this, when you're dealing with futures contracts, the multiplier can change. It's not like a standardized option contract on a stock, which is 100. On futures contracts, the multiplier can be different depending on what the asset is. In this example, this is the main crude oil contract, so the multiplier is 1,000. So each contract, so you see -1 here, that's -1,000. So in other words, if we were assigned, we'd be assigned 55,000 here. The strike price is 55. Okay, so just be wary of that. So I put in a limit price, and just to show you what my limit price is, it's 0.09. So if I come into here, orders and trades, you'll see it here. I have a limit price in here. If I went to modify the order, you'll see it clearer at 0.09 here. So if you think about it, 0.09 multiplied by 1,000 is $90. So I've got that order in there to close out that trade. So for example, if crude oil jumped today, whatever, 2 or 3%, there's a chance we might actually get out at 9 cents because the value of the put option is going to decrease dramatically. So I have that in there as a good to cancel order, just to take this trade off the table. Is there anybody there who's unclear about crude oil or has any questions about
it? Stephen, can you hear me? It's Stephen Gavin here.
Hi, Stephen.
I'm just a little confused on that. What you just mentioned about your the limit price you set in to close out, and just that previous page you had where you had your SPY and oil positions. Just do you see that price beside the 56.50 there, where it has at the close the last day was 53 there? See there the meaning of this specifically, because this kind of, I got a little confused when I was looking through my own position recently. Could you just explain just the firstly? You chose to close this out at 90. So obviously the value presumably of your position being what, 90 cents, is that correct? Could you just explain to me what the meaning of that is, because I don't quite get it.
Okay, so they're great questions. So first of all, Stephen, let me deal with closing out the trade, right? So if you look at here, our average price when we open the trade here is 49 cents. Can you see that there?
Yeah, I can see. No problem.
Yeah. Okay. So you multiply that by 1,000, that's $490. And you can see when you look under your cost basis here this is pretty much what you took in. It will always show a minus there when you're selling a put option, because that's the value that came into you. Okay. It was 487 minus, it's 490 minus basically your commissions. Okay,
I got you. Yeah, it's like what's it cost to me is a negative, so I've gained $490, give or take there. Yeah, I got it.
Absolutely correct. Now the current market value you can see here is 424. So I would always suggest here, so because sometimes when you're looking at this platform here, Stephen, right, the prices here aren't live, or they're not, they can be delayed. And what I would always focus on is your market value. So you can see the market value here is 424. So in essence, we're up. We're in profit here to the tune of whatever, it's $57 or whatever it is. Okay. So it's the difference between these two. You can see, obviously, if the market value is lower, in theory, we could actually come in and buy this out and pay out $424, close out of the trade. Yeah?
And then you're $60 up there, I see, whatever the difference is.
Correct. Correct. Now, sometimes, right, these numbers don't exactly correlate here. It's I can see why it is confusing, to be quite honest with you. But it is what it is, unfortunately, on that platform, right? As regards closing out the trade, I just wanted to be clear that the limit price is 0.09, and sometimes people can get confused, and that's what I was trying to avoid there by saying that. If you look at here, my order, again, I'll just go to the modify screen just to see it. You'll see it's 0.09. And the reason, if I had said we're going to close the contract out for a $90 value, somebody might put in 90 here,
Okay.
And that's the reason why I just wanted to spell it out. Your limit price is 0.09. Because the contract is 1,000 multiplier, 0.09 multiplied by 1,000 is $90,
Gotcha. So you're looking to close this out at $90 when this particular futures contract is worth, is it $90? Is that what it is?
Correct.
All right.
So trying to correlate that with the actual underlying crude oil price is very difficult. So there's two factors at play with an option. You've got the time to expiry. So as each day takes if you look at the The expiry in this is October the 29th, which is what, less than 2 weeks away now, okay? So as each day ticks by between now and then, let's assume oil prices never moved again from where they are now. The value of that option will eventually decrease to zero.
Yeah, it'll erode. That I get, yeah.
Because the put option will be out of the money. In other words, the share price is going to be above 55, which means that the value of this option on October the 29th will be zero. So as each day ticks between now and then, the value of this is decreasing. And that's why I love selling option premium, is because you're basically selling time decay. Okay.
Yeah.
Now, if in between though, the share price rises or falls, so let's say crude oil does this today for whatever, some news comes out, there's a chance the value of that option that we own or that we've sold here is going to decrease big time. And if that happened, then you know what, we might say, let's close it out now rather than wait until expiry. Let's take the profit off the table, in other words.
I mean, would you feel you're at risk that case, that, you know, because assuming you don't want to take, you know, you want to take assignment at 55, would you, I mean, if prices shot up by, you know, 5-6%, would you be bothered? I mean, I'm just curious. Yeah, I can take $60-65 now, or I can wait until, you know, a week and a half, or whatever it is, 2 weeks from now, and take $80 or $90. I'm just curious. Have you seen these things just act far too volatile for your liking? Is that why you'd see, or you'd look at seeing that, for example, say, do you know what? I don't know. I'm up with that. I'll take the money now. I'm not going to risk it coming back down again and retesting that 55 or going below.
So brilliant question, Stephen. So everybody is different on this, right? So the way I would look at it is, let's say for argument's sake, the value of this drops to $90. You think about it, I'll have made $400 profit, pretty much 80% of my max potential. If I can make 487 as my max profit, and I'm up, let's say 400 today, you have to ask yourself, is it worth holding on to this for 2 weeks, given it is a crude oil contract and we know how volatile it is?
Gotcha, yeah.
You can lock in your profit. So if we go back to the chart, I'll just show you an example here. When it got to here, I was about to close it out, and we were up, I think, $350 on the contract. So I could have bagged plus 350 there, because my feeling was this is just going to keep rolling up and down until we get some clear indication that supply is starting to dwindle, or at least the storage levels are starting to fall. You know, so my view was that we're going to revisit these lows probably again, and surely enough we did, and we went even lower. So I could have bagged my 330 in there, or 350, sold another one down here, and be ready to go again.
Oh, again, yeah.
Think it's like nearly rolling a stock, except you're rolling a put option on the crude oil contract. So in this scenario, you're saying, right, when it gets up here, we take our profit off the table. It pulls back, we sell it again. You know.
Okay.
And so on and so forth. And like, if you think about it, that was like 4 days later, we would have made 300 or 400 quid. Now we could have rode it again and probably made another 300 or 400 quid in a short piece.
Yes. I get you. Okay. Yeah. Thank you very much.
But on the flip side of that, just to, you know, sometimes it's better just to let it expire. Sometimes it works out. Actually, you know, if we'd have done nothing, we would have made an extra 80 and 90 quid. You know, and everyone's different on that.
There you have it. It's a matter of appetite, isn't it? And your tolerance for risk, I suppose.
Absolutely. And just while we're on that, I just wanted to explain to people as well. Let's say crude oil contracts, right? They're kind of volatile, and it's not everybody's cup of tea, especially if you don't really understand futures. So if you wanted to do it a different way, you could use USO, which is the United States Oil Fund. So ultimately, what this is an ETF, right? And the managers of the ETF, they ultimately bundle up a load of different crude oil futures. So again, if I was to go to the crude oil chart here just for a second, see all these are all different contracts. So that's, sorry, apologies. This here is your, you know, your December contract going into the January contract, and there's loads of contracts going forward into the future. So what this fund does is they buy a load of contracts into the future, and each future has a different price because we're going further into the future as such, right? So if you didn't want all that hassle of understanding about crude oil futures and all that, you can basically trade the ETF, which trades like a stock, and you could have sold puts on USO. It's not exactly the same, right? And the pricing is different. It's a little bit like when we were doing natural gas and we were trading the natural gas ETF, the returns weren't the same. But some people prefer this. And what you could do there in this situation is actually just write put options on USO if you wanted. So for example, let me go, oh, my apologies. Here we go, trade, option chains, and we'll bring up USO then. And all I'm doing here is just showing you a different look. That's all. I like doing it the futures way, but everybody is different again. So let's say you came along here. This trades like a traditional share. So the multiplier is 100 on this one when you're doing the options. Okay. So you can see if you sold the $65 puts here, for example, you're getting in $110 a contract. It doesn't sound like a lot, but it's 2%, guys. Like, it's not out to November the 19th. It's not to be sneezed at. And if you do your performance profile, that has an 81% probability of profit. The difference is, in this one here, you would actually get assigned the ETF. Let's say, for argument's sake, at expiry, USO falls to 64. You will get assigned 100 shares, and if you had 5 contracts, it'd be 500 shares of USO at $65. And then you'll just be holding that going forward. So you don't have the same time pressure as such as you would with this kind of crude oil futures contract where the December is the timeline, you know? I hope that makes sense.
Thanks a million. Cheers for that.
No problem at all. No problem. Any other questions on crude oil there, guys? My view is, folks, this is a little bit like our natural gas trade when we were trading it. If you look, there's your crude oil chart. You know, this is, so that's your USO chart. Let me do our crude oil chart. You can see here, we haven't been down this low since COVID, basically. It's not, I will always say that it doesn't mean it can't keep going lower, but that's why I'm interested in selling the puts down here. It's not a pretty looking chart, and certainly the supply and demand dynamics support the lower share price or the lower price of oil. But I think this is something we can make a few quid on over the next few weeks and months, is keep selling put options out of the money, generate income, walk away. If you don't like the big contract here, you can switch down to USO, or you can do the micro contract to the futures, which is MCL as the ticker. Okay. Just kind of then moving on to our short-term stock trades. I'm just looking in the pre-market here. Most of them are up in pre-market, which is good. So I've sent out already the deal on these guys here. So we're holding all of them. We're not going to sell them all. So unless you have any questions on them, I'll skip on. Just let me know. Meta is kind of come off its low here. We're going to leave Meta for a bit, but Adobe and GoDaddy there, they had 2 bad days yesterday. And it was very close yesterday on GoDaddy pulling the trigger. It's up 1.2% today on Adobe, but these are kind of unloved at the moment for various reasons, and AI has a lot to do with it. Okay, so everybody's trying to figure out now what services AI are going to impact negatively. And I read an amazing article this week on Caterpillar, and they believe AI is going to contribute. I can't remember the number, so don't quote me on this, but I think it was 5 billion in extra additional revenue going forward over the next number of years. So AI and Caterpillar, kind of going, how does that work? But there you go. We're already seeing that there's deals done with Walmart, people using AI to check out now. And Walmart have done a deal with OpenAI. So the monetization of this is starting to happen very, very quickly. But the knock-on impact then to other businesses like Adobe and GoDaddy is there a cannibalization effect there, where, for example, the services that Adobe provides, can you get it cheaper through AI? And, you know, those questions, those risks are out there and are real. But Adobe has come out and said that their version of AI is commercialized at the moment, and there's a significant adoption. but the market at this minute in time doesn't seem to be buying what they're saying, what they're selling. So it's important to know these things, you know. When it comes to Meta, I'm going to kind of just look at it from my perspective, just on AI. Small business owner, don't have a huge marketing team or anything like that. So anything that can help me market my business the most efficient way possible is going to be welcome. And if you think of the main advertisers, you know, Google, Meta, LinkedIn, you know, YouTube, TikTok, all of those guys, anything that can help small businesses, let's say with an AI tool that makes it simpler to promote your business and track the measurement of it, is most welcome. And all of these guys, that's what's coming. And for me, they're still great value now. I'm just looking even at Google. If I just jump onto Google, I know I'm kind of jumping around a bit here, but Google, for example, I seen a report yesterday. Waymo robo taxis basically are going to be on the streets of London by the end of 2026. It's happening. You know, that's a wing of Google's business. And just on Alphabet as well, like their suite of business tools are incredible in my opinion. I use them myself, and I just find that the services side of these businesses is growing at a rapid pace, and AI is going to just multiply that very fast, you know. And this is why my argument is on the market, broadly speaking, I think barring some sort of a China-US serious escalation in a trade war, I think this market just goes up, you know. So look, that was kind of just back to our short-term trades. Probably I'll have a go at these two guys probably either today or tomorrow. Schlumberger, because their earnings are tomorrow, I'm not going to bother. And where oil prices are at, and potentially the earnings could be disappointing and you might get a bit of a sell-off. It could go either way. Look, we're flipping a coin here, to be honest, with earnings. So I'd rather just sit that one out, to be honest with you. Honeywell, that was one that came on, we missed the boat, and it's come right back down. So again, I like to see charts like this where it's coming back to a real common area, and your chances are that you're going to get out of that at a 3 or a 4% gain, you know. So these are kind of some of the short-term trades that we're looking at this minute in time, most likely to hit Adobe and GoDaddy. Any questions on that, folks? Is there anything anyone wants me to look at? The dollar, currencies, commodities, anything like that?
We just look at copper, please. The euro dollar.
The euro dollar? Yep. Give me 1 second there.
And copper, Stephen, when you're ready.
Yeah, copper, no problem. So, euro dollar here. So, I found this really, really interesting, Michael, during the week, right? So anytime you're looking at currencies, look at bond yields in conjunction with it, right? So if you think about it here, the interest rate on the 10-year came down during the week, okay? But the dollar strengthened. Normally the correlation is the opposite to that. I just found that a little bit strange. Normally the dollar would start to weaken as interest rates are coming down. Because if you think about it, if bond yields are falling, there's two reasons for that. One, maybe the demand for bonds were so overwhelming that the price came down, right? That could be one reason. The other one is that the expectations is that interest rates are going to get cut. And if interest rates are expected to get cut, you would expect the US dollar to weaken, and it didn't do that. You know, if you look, I'm talking about this little period of time here. It's starting to weaken a bit now. My view is, Michael, we're going to revisit 118. It is going to weaken. And probably I think it's going to go to 120. That's my best guess on it. But I would struggle to trade this in any meaningful way. If you were going to trade this, you could do it through selling put options on the currency futures again. So something like that, like what we've done with crude oil. But actually going long or short than that in the very, just say, unless you're doing some sort of day trading on this, where you're in for a few pips and you're out, that's different. But longer term, my best guess is it's probably going to weaken to 118 and then possibly 120. But at that point, I think we're nearly done on it. We could be done at 118, to be honest. because I still don't believe the Fed are going to have to cut a lot. You know, certainly the economic data doesn't support it. Is that okay, Michael?
Okay, that's good, yeah.
The other one there, Brendan asked me about copper. So we're looking at copper futures here. So when you're thinking about copper, I think you got to think about China quite a lot, you know. And if China is going to improve, then probably copper is going to go up in value. And if you look at copper versus all the other metals, it hasn't really risen it to the same level. It's actually, so if we look at silver and gold, for example, that's a chart of silver. There's gold. Copper hasn't done the same. So don't forget, copper was rallying hard on the back of the move to renewable energies. So the amount of copper required, for example, for electric cars, for wind turbines, etc., like that, there was a big report out saying that they can't mine the copper quick enough in order to meet the demand. And that's supposed to kick in next year, by the way. But the price, whilst it has gone up, it hasn't gone up to the same level as silver or gold. So that leads me to think that there's probably an opportunity here, Brendan, in copper. But I think we got to have evidence that China has recovered and that the disputes that are going on are resolved. So I think do you think that China and the US are going to shake hands, move on? I think you could see a spike in copper prices. That would be my best guess on copper. What do you think yourself, Brennan?
No, I don't know. Just as it has, it has lagged the other commodities, and as you say, I think the outlook for EV is down.
Yeah,
but if that turns a corner, you could see it taking off.
Absolutely. Yeah, I agree. It's certainly like it's kind of it's a bit of a scattered looking chart. I don't know if you remember, we were trading it down here between 3 and 4 for a while. Then it broke out, and we said we'd leave it. It's now up at the higher end of the next band, which was what, 4 to 5, pushed up to 6, and now it's back at 5. So it is quite a difficult one, you know. Like I would. These are very, very difficult to trade, in my opinion, given that there's so much changing. 1 minute we're on a green agenda, the next minute we're not. What data do you believe coming out of China? And indeed now, what data do you actually believe coming out of the US? I think both are equally difficult. And it makes trading hard. So, like, I'm kind of just going to, I'm going to put out there one of my own conspiracy theories as such. So I've no fact or evidence behind this, but I'm just coming back to the S&P 500. President of the United States issued a tweet on a Friday, caused this to happen in the stock market. We know that the Trump organization are heavily involved in different versions of crypto. And over the weekend, the value of crypto was plummeting. And out of the blue, then a tweet comes out on the Sunday, basically saying President Xi made a mistake and they're going to resolve things. To me, the Trump organization was being hurt by the volatility in crypto. And therefore, that tweet came out. So if my theory is correct, you have to think that crypto and the stock market are now linked, and that President Trump is going to do everything in his power to keep the stock market right. And here's what I'm talking about. If one of those assets sells off, let's say we go to Bitcoin or whatever it is, right? And this is something you got to be aware of. There's so many people, by the way, here's your volatility in Bitcoin, okay? But there's so many people who are heavily invested now, and institutions heavily invested into Bitcoin and different versions of crypto. If we get a winter in crypto, think of what the knock-on impacts could be for the stock market. Forget about individual stocks. I want you to imagine your portfolio is whatever it is, 100 grand, and you got 50% in crypto, or maybe you're leveraged on crypto, even worse, and 50 in stocks. And all of a sudden, the value starts plummeting. The knock-on impact for people who are leveraged is margin calls. So that can go into your stock portfolio as well. So let's say, for argument's sake, you're saying, I think crypto's going to come back. I don't want to sell my position. You start selling off stocks just to keep your position alive. And this is the risk. I think this is a big risk that's not being discussed at this moment in time in the market, that if we get a shakeout in crypto, I think it can cause the stock market to crash. It's a big if and but the actions of the President of the United States are telling me extremely concerned about the value of crypto prices, you know. And I think that that could be a creator of volatility down the line. It's not in anybody's interest for crypto prices to fall. I'm not saying that. In fact, I'm saying the opposite. The interest is to keep it going up. But what happens if it doesn't? I think it could force a big margin sell-off in the market. And that's another risk you have to kind of just put out there. What's the probability of it? It's impossible to put a number on it, but it is out there, you know. Any other
Stephen,
yeah.
So it just, I mean, I've touched on this a few times with you. It doesn't interest you. It doesn't blow your skirt up, the crypto end of things. What I know about it, you could write in the back of a stamp. So I'll come out and say it. I live in the UAE. There's a considerable number of people who've come out here. Now a lot of it's dirty money as well, being flushed through Bitcoins and whatever else. But people are invested in this. People see something in it, and people have clearly profited on paper, certainly from it, with expectations it'll go to the moon. And to quote myself and what you said to me when I asked you, are we missing a trick? You told me we are, but I don't know where this, or will it or should it have a place in my own portfolio. It's mine is slow and steady. My mantra. It's all reliables. It's property. It's cash. It's commodities. And now, now you've introduced me to options, and that's how it's been. However, this is a new player at the table, and I don't know how often you get asked this question. To be fair, if anyone watching now or later on has it on the tip of their tongue, but does it have a place here? Is there a reason for us to discuss it? Or is it something you yourself are not content at this time to entertain?
No, I'll always discuss a trading opportunity, Stephen, right? So this, just my own thing, I've never got involved in it. I've loads of friends in it. And obviously some have done well. I very rarely hear about any of their losses, which concerns me. But my point is, it's just not my cup of tea. I don't fully understand it, and therefore it's not for me. Having said that, there's clearly a demand for it. I mean, everybody can see it. The price is going the way it's going, so there is a demand for it, and most likely that demand isn't going to wane as institutions continue to build up. But again, it is in an emerging, let's call it an emerging technology, for want of a better word. And it's great until it isn't. And, there's examples there, we're at 110, we're down at 70 in a heartbeat. And that's what you got to be ready for with something like this. So, again, just from a fundamental perspective, I struggle to understand how anyone can price it. How do you understand the supply part?
And I'm hearing that from, some of the commentators that have, I've given some credence to. They just don't see where the worth in it is. What does it provide? Where is it going to go? On what basis? It's, they see it as built on sand, pardon the pun. But I'm with you. I don't understand it, but I could get to learn if need be. But I like yourself, I hear people waxing lyrical when it's all on their good days, and then they just keep mighty quiet when the arse falls out of it. And heaven forbid, like as you say, being leveraged to the hilt on it as well. But I don't know.
It's certainly tradable. If you want active trading and you need something to move, crypto is your man. Like trading options is your man. Look, there's up 6%, it's up 6% or 0.6% today or whatever, you know. But the point I'm making is this is where you have to do a self-check as well, where you go,
Right.
well, who am I as an investor and how am I with volatility? And I guarantee you, when somebody starts out with this is what people will say, oh, I don't mind a bit of risk. I'm grand with a bit of risk. I want to make money. And they're grand till they're not grand.
Yeah.
And then when things go wrong, then all of a sudden, oh, I'm not so happy with this anymore.
No,
That's usually what happens. And then you realize what your risk tolerance really is when you go through a bit of pain. I'm not saying people are going to go through pain with Bitcoin. This thing could go on up. I've no idea where it's going to go. It's just not for me because I can't put, I can't do any analysis on it when you don't understand the supply and demand. The demand is clearly there. The supply side, I don't understand. And people can talk to me about mining and everything else they want to. I still don't understand it. So for me, this is just like a game that's being created at this moment in time where people can bet on the game. But I have a feeling most of them don't understand the rules of the game yet. And it's only when the rules change, maybe for the worse, they'll realize I hadn't a clue what I was doing. And that's my fear with this, you know. Now, I've clearly been wrong on this, right? So I'll hold my hands up to that. I'm not an expert on crypto, don't claim to be. I've no interest in studying it. It might be an old horse with blinkers on, and I might be considered that, but I'm happy enough with that. And there's clearly people, there's friends of mine who are doing very well out of it, but it's just not for me. Is it tradable? Absolutely, it's tradable. It's very tradable, and you can make a lot of money out of it if you get it right, you know.
I understand. Well, look, thanks for your input on it. I won't boogie with it again.
Yeah, no, don't. There's no problem there. I'm just saying, like, I'm just going to show you the result of what happened on Friday. I'll go back to Friday on this. Here you go. That's the trading before last Friday. That's a 10% correction there for a 2% correction in the stock market. That's what you're dealing with. So if you want to get involved in that, that's your kind of your multiplier effect. You know, we get bad stock market, and I don't think we will, by the way. But if we do, I think crypto comes down with it. You know, because I think they're both interlinked now because of people are leveraged, and margin calls will come hot and heavy. So you can imagine the margin on crypto, I would say, is quite high. You know.
I mean, like they're all youngsters, you know. I'm old enough to be their father, you know. Some of them, and they're telling me this, that, and the other about it, and I'm looking there, just nodding my head. They're talking in hieroglyphs, but I don't know. The thing about being out here is that, you know, you can borrow to beat the band, leverage it. If you win, great. If you don't, you leave your car running at the airport and off you go. We've seen it time and time again, and still happening. But I was just curious. It's not a discussion. It's not something I've heard being discussed here. And my knowledge of it is minimal. But looking at the numbers there, I mean, based on what you're telling me, my own research has told me that yes, it's proportional to the stock market to some degree. Exact numbers I don't know, but it certainly moves in tandem. So on good days, up you go, on bad, there you have it. It's in black and white in front of you, or red and green in front of you. Others are not.
My argument on this is, Stephen, right? Let's say, for argument's sake, right, crypto, you have to accept you could lose your short on it, right? I think you'd agree that, but you can make a lot of money, right? So I'll give you that. But if you were going to take that approach, what would be wrong with doing something that you have statistical probabilities on? So let's say we go in to do options on SPY, right? And let's say you go out a month, and it's not doing it at the moment, right? But you see in the example earlier on where we did SPY and we were getting 0.5% with a 93% probability of profit, right? So if you were saying, look, I'm going to be a risky investor and Bitcoin's going to form part of it, why wouldn't you then do something like, oh, I'm going to actually maybe do more contracts of SPY and generate 2% for that trade, and I'll have a 93% chance of winning on it. At least you've got a statistical probability that you've worked with before. It's still not a guarantee, but it's probably a higher chance of winning than what you're going to do here. Because you buy crypto now, your odds are 50-50, you know?
When you showed me that, the correction there after the 2%, 2% drop, 10% down on crypto, with that drop, on the market, volatility is going to go up. There's going to be some decent premiums. Why not get into that? And that's what was in my head when I was speaking to you there, and I saw that previous chart you had in it. So why not stick with what works? I'm just asking the question. I can't be the only person here either, or who watches it later on.
Oh, everybody I meet talks about crypto. Everybody wants crypto, and it's just it'd be wrong of me to start even dabbling in it because I haven't got a clue about it, to be honest.
Okay, I'm fine with that. I just thought I'd mention. Thank you very much.
No
Sorry.
problem. It's a great question. No, it's a great question. Any other questions out there, guys? Okay, so that was brilliant again, and thanks for all the questions there, folks. I think that's what makes these sessions better, is your questions, because I guarantee you, if you've asked the question, somebody else is thinking about it and maybe just hasn't asked or had the time to get around to it. So thanks very much, and keep them coming. So I will let you know if we place any trades today, and other than that, I'll leave you there, and we'll have a great day, and we'll chat again soon.
Thanks again, Stephen. Have a good weekend.
You too, guys. Bye now.
Cheers, Stephen. Bye.
Bye.